Listen, I don't care how much money you make right now, your income is not going to make you rich because if that was the case, everyone who had a high income would be rich, but they're not. And in this video, I'm going to break down exactly why. And by the end of the video, I'm going to tell you the number one way that you can ensure that you're always rich, that you always have money coming in. And a lot of people don't want to use this way because they think it's hard or it's too difficult, but we'll get into that at the end of the video. My name is Adrian. This is Always Talk Money. I like to talk money as it relates to personal finance, investing, and anything else that will help you to level up financially. If that sounds good to you, leave a like for the YouTube algorithm, please and thank you. Subscribe, become part of the family. But without further ado, let's get into the video. Listen, we've all seen the hit pieces, the documentaries, the articles of athletes that go broke. But now in society, we have a new pandemic or a new endemic or a new whatever endemic happening, and that's high income earners are living paycheck to paycheck. And that's because of lifestyle inflation. You see, when you get that first paycheck, it feels really good, especially when it has a couple zeros, a couple commas attached to it. You, by human nature, just wants to go out and ball. You want to go out and flex on your friends. You want to show it to the internet and show people how successful you are, even though that's not real success, right? Lifestyle inflation is addicting. It's like a drug. You want to show off your nice apartment, your nice car. You want to get the best vacation so you can take picturesque pictures in exotic locations. Say that 10 times fast, right? That was very, very hard for me. But it all boils down to lifestyle inflation. You start eating out more, going on more dates, just doing all the things that you never used to do when you were broke. Because when you were broke, all you could envision is doing those things. When you were broke, you had to suffer. And so you looked at the people that were living that life and you just couldn't wait your turn to do it. But that leads to a big problem because if you're spending every single thing that you earn, you will never be able to build wealth. And wealth is net worth. Understand that net worth is the name of the game, right? That's my second point. Net worth is the name of the game. So in anything with personal finance, in anything with investing and just improving your career and just making more money, all you're trying to do is improving your net worth. What is net worth? People might ask. Net worth is your assets minus your liabilities. So it's what you own minus what you owe. So if you own a car and that car is worth $10,000, but you owe $5,000 on a note, well, your net worth is $5,000. Consequently, if you own a house and you have about $100,000 worth of equity, your net worth is $100,000 because that is the equity that you have in the home. So when you're trying to level up in life, it's not about fancy things, buying things. It's about improving your net worth. So buy more investments, buy more income producing assets, invest in your education and your skills so you can make even more money, right? Don't confuse net worth to income. I see a lot of people do that and it's just not the same. As I said in the first point, we've seen a lot of multimillionaire athletes go broke just years after retiring from their respective leagues. And why is that? Because they never learned the skill of keeping money, right? And that's the next point I want to belabor right here. Making money is a skill, but keeping money is also a skill. You might think that sounds corny, you might think that sounds simple, but it absolutely is the truth. You going out there and just grinding and working hard has no correlation on what you do with that paycheck once you get it. Has no correlation on if you understand investing, returns, understand real estate and the markets, understanding how to lower your earned income so you pay less taxes. These are all things that savvy investors, savvy business people, and people who are used to having generational wealth, these are things that they know, these are things that they think about, and these are things that they teach their children. The problem is a lot of us regular folks, we see them on TV, we see them in the newspapers and magazines, and we see the lifestyle that they live, and we think that's what makes them rich, but that's further from the truth. The real game, the real money game, the real high level money game is to live off of your assets. What do I mean by that? It means, let's say you earn $150,000 per year, and that's you working a job, software engineering, mechanic, whatever it is that you do, you earn $150,000 per year. Every single day you go into work, you trading your time for your money. So that means if you're balling out, if you're buying all these things, the minute you stop working, you cannot afford to ball out and buy these things anymore. Now, let's say, for example, on the opposite side, you own dividend stock in some dividend stock ETFs, and this dividend stock pays you 150K per year in payouts, right? So no matter what you do, it doesn't matter if you go to work, doesn't matter if you sleep in all day, doesn't matter if you spend the whole year playing golf, this dividend stock is paying you 150K just to exist. That is your assets paying you to live. Now you can ball out. So when you see rich people buying all these properties, flying private, and so on and so forth, they can do that because their assets are funding their lifestyle. So you want to get to the point where your assets can fund your lifestyle. I want to get to the point where all of my assets can fund my lifestyle. So that's investing, building businesses, going in your 401k. All these things are way, way more important than whatever income that you might have from your job. Guys, if this video is bringing you value so far, please leave a like for the YouTube algorithm, subscribe, become part of the family. We make new videos like this every single week. Here's the thing. You might say, Adrian, I love my job. I make a lot of money. I'm great at what I do. It's never going to slow down. But guess what? That's what a lot of people had said. Your income will slow down at some point. It could be an emergency. It could be an injury if you're an athlete, or it could be an injury on the job site. We see a lot of people who had to go on disability, and disability doesn't pay the same as your full salary, right? So you're limited in that aspect. You want to be in a place where whatever happens to you, you have this money coming in every single month. And that is why people preach having an emergency fund, because we know that Murphy's Law, if something can happen, it will happen, right? And so when you have an emergency fund that gives you coverage, 3 to 6 months is what's recommended. And that can give you peace of mind if anything in your life were to happen. And sometimes it doesn't have to happen to you. What if, just for argument's sake, knock on wood, but you have to take care of a family member and you can't work while you're doing that, right? I know we're in the advent of remote work, but not everybody is lucky to do that. Some people have to go into work every single day to get their jobs done. And that's why you need an emergency fund. On top of that, there's human nature, right? Because when we have this job, we might be very good at it. We might be comfortable. We might just be living high off this income. But guess what? We get complacent because by human nature, we like the path of least resistance, right? I study a lot of evolutionary psychology. I love peeking into the human mind and understanding the habits of human beings. That's why I even teach this brand of personal finance, where I'm more focused on your habits, your behaviors, and so on and so forth. When we get complacent, we see this income and we just think that it's going to be like this forever. And when we get complacent, we make complacent decisions in our finances and so on and so forth. So maybe we could invest $1,000 a month, but we are comfortable doing $500 a month because we went on the investment calculator and we saw that by investing only $500, we're still going to hit our retirement number. So why invest the extra 500 if I don't have to? That's just not the right mindset to do. You want to be as aggressive as possible when you're trying to build your nest egg. The quicker you can do it, the better. The quicker you can do it, the quicker you get to peace of mind, because you might plan to have your nest egg fully funded by 65 on your current trajectory, but you had a life event, you had a kid that you probably didn't expect, and that threw off your calculations, right? Life happens and you have to always prepare for the worst, prepare for the inevitable, and never multiply by zero. What do I mean by that? It means getting out of debt, getting leverage out of your life, because even just a little liability can still hurt you. And the concept of never multiply by zero is 0 multiplied by 1 is 0, and 0 multiplied by 1,000 is still 0. So no matter how high you're flying, if you have a liability, namely debt, that can ruin everything that you have going on, right? It could be in the form of a bankruptcy, student loans, mortgage debt, personal debt, credit cards, whatever it is. You can have all this money and have this extremely high income, but if you owe somebody even a little bit of money, you are putting your financials at risk. And if you want to learn how to get out of debt, I have a 10-day debt elimination ebook, link in the description down below. Now, at the beginning of the video, I told you there is one income source that I believe, in my opinion, is above all. And a lot of people try to avoid this income source because they think it's hard. And that is building a business or building income streams that you directly can control. So it doesn't necessarily mean that you have to be in the business. It could be a business that you invest in. It could be businesses that you buy in the market in the terms of ETFs and stocks and portfolios and so on and so forth. Why is that important? Because as we've seen in the advent of the last couple of years, tech people get laid off all the time. These are high income people. If you're an athlete, you could get cut from a team. If you're just a working Joe, regular 9 to 5, not super high salary or anything, you could still be laid off. Your company could go out of business. All of these things are out of your control, but what's in your control is how much money you can put in an investment account, how much money you can put in a business, how you can start your own business or run your own business. You always have to have at least a couple income sources bringing in significant income to you that you control. If you're just going to work and getting a paycheck, I'm sorry to tell you, but you are multiplying by zero because you are at risk at whatever your boss does, whatever your manager does, and whatever that company does. What if you go into work and that manager, that boss doesn't like you and they say, you know what, pack your stuff, you're out of here. Now you're worried about your bills. Now you're worried about how you're going to take care of your family. So always have an income source that you can control. My personal recommendation is a business. I'm an entrepreneur, so I'm biased, but always be investing in the market, always be investing in your 401k. If you don't know anything about investing, ETFs, or anything like that, check my ETF investing ebook in the link in the description down below. My name is Adrian. This is Always Talk Money. Leave a like for the video, subscribe, become part of the family, and until next time, I will see you. Have a good day. Peace.